Gold doesn't need to win the fight against dollar denominated conventional savings products. It just needs to lose the fight less badly. It just needs to regain its 3-decade mean, which I think it's going to do.
Please join us for our next live stream, Sunday, June 6th at 9 p.m. Eastern. We'll go over current events, past guests, and of course, gold and silver news. Once again, our next live stream will be Sunday, June 6th, 9 p.m. Eastern. See you then. Hello again, everyone, and welcome to another edition of Silver Bullion Television, SBTV. I'm your host, Patrick Vieira. As always, if you are new to our channel or if you haven't already done so, please do subscribe, hit the bell to be notified of the updates, and give us a thumbs up. If you like what we do, we truly do appreciate your support, and thank you for it. Rick Rule, former CEO and president of Sprott Holdings, joins us today. The founder of Rule Investment Media and the renowned investor, Rick is widely regarded as one of the most influential people in the mining and resource industry. Having said all that, it's time to saddle up and silver up for Rick Rule. Rick, welcome back to SBTV. How are you doing?
Pat, I'm delighted to be back with you. Thank you. And since in retirement or semi-retirement, frankly, life is great. Thank you for asking.
All right. Glad to hear that. You know, Rick, just speaking of that, you've retired from being CEO of Sprott Holdings, where you do remain a director, I believe. And we've heard you say that after retiring, you've been looking to invest in a different kind of wealth creation, the educating and mentoring of younger people. Can we start off by having you tell us about Rule Investment Media and what kinds of things you're going to be doing to help you achieve that goal of educating and mentoring younger people?
I'm not sure all of what I intend to do. I'm going up the technology curve to learn what's possible. I've been encouraged now for 40 years, Patrick, among other things, to write a book, a how-to book on investing. And one of the things I've learned in 40 years of communication is that although people like to read, they like to be read to more, myself included. I like books on tape, read by the authors, at least as much as reading them myself. But a lot of communication is nonverbal, that is to say video. And I believe that the future of books is in fact video. And so I intend to, in the next couple of years, do a 30 to 35 chapter video series that will be my book, covering how to invest, and in particular, how to invest in precious metals and natural resources. I see this as being freeware, meaning that I'll distribute it for free on the Rule Investment Media channel and as many other channels as would like to avail themselves of content, which I hope will be very, very, very good content. In addition, I'm going to take some of the most popular features of the Vancouver Natural Resource Investment Symposium, which I've helped run for 27 years now, and bring them onto the video channel. We learned last year, after 26 years of running the conference physically, that we could run a virtual conference. And in fact, the fact that we ran a virtual conference meant that we were able to host 2,200 attendees rather than 600, which we had the year before. One of the most, in fact, the favorite part of that conference for attendees was always the Living Legends panel, where I would assemble 3 or 4 people who had built multi-billion-dollar companies from scratch and ask them not so much about their companies, but rather about how they built them and what lessons that they had learned in building them that were useful to them in investing, and what lessons, too, might they be able to teach as a consequence of building highly successful companies? What lessons might they be able to teach individual investors? So I'm going to do a 12 interview series where I interview living legends from mining and oil and gas, not so much just about their companies, but rather about how they built the companies and how the lessons that they learned might be appropriate to individual investors. So I'm certainly looking forward to doing those two things. How I monetize this thing, in other words, how I make money on it, is a very different question. And frankly, although I don't want to sound too arrogant, I've reached the point in life where I don't have to worry too much about monetizing things. You know, I've already done that. So mostly, I think I'm going to build the best channel that I can possibly build, uh, at least with regards to content that amuses me, and hopefully will amuse an audience.
I think you're going to do just fine. I've taken a look at your channel. You already have some heavy hitters on there. I mean, you've had Daniel DiMartino Booth, Nomi Prince, quite a number of names already. So I congratulate you and wish you the best with your channel.
Well, I look forward to communicating with your channel and cooperating with your channel. As I say, with no no particular plans to monetize it. I don't think anybody needs to regard me as a competitor.
No, we're all friends here. We're all friends. Yeah. But Rick, you've talked about, of course, resources over the years, but the younger investors are saying cryptos are a better investment given that they have already made huge gains. Now, yourself, knowing years of upturns and years of downturns, what's your opinion on this?
Well, I need to caveat these comments by saying that I'm a 68-year-old Luddite, an inadvertent Luddite. I'm not a technology investor, despite having been born in Silicon Valley. So I understand the guts of crypto only marginally better than most people do, having studied them. In fairness, Sprott has made several $1 million of investments in blockchain and distributed technology around distributed ledger technology in precious metals, which is to say gold and silver. And the consequence of that is that I've delved a little more deeply into crypto, being several $1 million exposed than other people might have. I have a few comments about crypto. The first is I understand the value proposition, which is or was anonymity. That proposition is fading, frankly. Frictionless transaction, which is a fantastic set of circumstances. The fact that the costs involved in documenting and transacting can go damn near to zero, which is very, very useful. The third part of the value proposition that I see that's important to me is the fact that you don't have to trust your counterparty, you don't have to trust your government, you don't have to trust a bank. You trust your peers in the network. I love that. Peer-to-peer trust, peer-to-peer verification, I love. But the most important utility, I think, is the network, which is to say, a cryptocurrency that has one user has no value whatsoever. A cryptocurrency that has 1 billion users, by contrast, has incredible value. Sort of like a telephone. You know, what would you do with the first phone? There's nobody to call. 2 phones? Yeah, okay. 1 billion phones? There's utility. So I get the overall value proposition. What's a little difficult for me to understand is when people talk about the scarcity in crypto, the scarcity disappears if there are multiple crypto products, which is to say there may be a scarcity or a contrived scarcity in Bitcoin, but it seems in particular the younger adherents are looking for the latest hot coin, and the promoters of that coin, if they're unconstrained, can burn as many coins as they can foist on the market, sort of like penny stocks. They can issue them ad infinitum, ad nauseum. The second difficulty I have with crypto is that the price volatility, which so delights speculators, of course, the volatility of the upside delights them the most, actually diminishes the crypto's utility as a medium of exchange. Because unless you live your entire life denominated in one crypto and no other currency, if you go to spend a highly volatile financial product like Bitcoin or Ethereum or one of those, if you go to buy a few sacks of groceries, you don't actually know what you paid. And the grocer doesn't know what he or she received. And the very volatility that delights speculators reduces the utility associated with the coin. So I'm attracted to cryptocurrencies. Listen, Patrick, I'm a consumer of currencies. You know, I spend Canadian dollars, I spend US dollars, I spend euros, I spend Chilean pesos. So to the extent that there are people working on new currencies to serve a currency consumer like me better, I'm all for it. I just think that the very upside volatility that we have seen, the price action has in many people's mind justified the narrative. If you have a hypothetical cryptocurrency and nothing changes with the size of the network, and that currency rises in price from $1 to $5. The fact that it's risen fivefold is attractive to speculators at the same time that arithmetically, you have reduced the price to value proposition by 80%. In other words, if nothing has changed, but the price has gone up fivefold, it's precisely 1/5 as attractive arithmetically. And some speculators don't seem to understand that. Having been in financial markets for 45 years, I know in the Canadian parlance that the backside of what the Canadians call a hockey stick graph is just as steep as the front side, but a lot less fun if you're long. So I would encourage people who are crypto speculators to think through the whole value proposition. Not saying to avoid the space, but just don't confuse price with utility.
And you mentioned Sprott, and I just want to go back to some recent things that I've seen. The Wall Street Silver movement and their affection for PSLV. What have you seen with the PSLV and the movement from Wall Street Silver?
The impact of Wall Street Silver, of what we fondly call the Reddit crowd, the new adherence to silver has been astonishing to me. I understood that grassroots financial movements could be extremely powerful, particularly narrative-driven movements like we've seen in the silver movement. It never occurred to me that millions of mostly younger speculators could actually tighten the physical silver market. If you had asked me what the impact of this would have been 10 weeks ago, I would have said a pimple on an elephant's behind. The silver markets are very vast, they're very deep, they're much more liquid, they're much less contrived than the GameStop market. And a whole bunch of people trying the same game in the silver business will learn the same crushing lesson that the Hunts learned. What I sort of failed to grasp is that the Hunts were three guys using extraordinary leverage, and they didn't have any political power. 1 million people using no leverage. It's much more difficult to constrain the power of that movement. We watched, as money flowed into the Sprott Physical Silver Trust, we watched ourselves, and I can't confirm this, I can just confirm our traders' angst. I watched us clean out all the silver available in Ottawa, and then all the good delivery silver available in Toronto. And then I watched us tighten Chicago, and then I watched us tighten New York, to the extent that we had to institute sub-custodian arrangements with the Royal Canadian Mint and other custodians in places like London and Singapore. Now, I had understood that there was a shortage of silver in retail denominations, ounce, 10-ounce product, partially because the demand came in so suddenly that the refiners and the dealers couldn't keep up with it. And partly too, because the European refiners were shut down by COVID and they couldn't buy 1,000-ounce product and melt it down into retail product. But we began to experience difficulty in 1,000-ounce product, which was interesting. The second thing I learned is that when our product was originally constructed, it was constructed by Eric Sprott, really with his own portfolio in mind. He wanted a exchange-traded silver product that wouldn't have any fear of credit risk with counterparty. So he decided no delivery receipts, no deposit receipts, only physical silver in segregated storage. I thought at the time that this was a product that would be difficult to sell because it was a product that was conceived around a lack of trust in the financial services sector. And that lack of trust 10 years ago wasn't particularly evident, which is why the ETFs in the first 10 years of their existence trounced our product. But that lack of trust is manifest now. And you can see, if you look at a graph of the drawdown of silver on COMEX, or despite the increase in the silver price, the lack or the decline in AUM in the silver ETFs at the same time that Sprott has become, I would suggest, the largest buyer of physical silver on the planet for the last 12 months. The combination of a product that obviates the need for trust in the financial services system, with a product that conveys some potential tax advantages to US holders has meant that this is a product that, let's just say Eric was prescient 10 or 12 years ago. He designed a product for himself that became precisely the product that the market believes it needs.
The last year or so, has that been one of the best years for PSLV?
Oh, it's been far and away the best year for PSLV. There were some amusing moments early in PSLV because we're constrained from holding delivery receipts and depository receipts. I remember that at one point in time, we went on a public offering to raise, like $200 million or something. And we came home with $500 or $600 million. The bullion dealers, the banks, the desks were conditioned to expect $200 or $250 million in demand. And they told us that they could fill us in, half an hour or 45 minutes of responsible trading. When we came back with $500 or $600 million, that was the first time we ever tightened the market. And while we were smiling, we were scrambling. But what we experienced then was nothing like we've experienced in the last 12 months.
Okay, was it getting a bit more difficult to find those 1,000 ounce LBMA bars?
With gold, you can buy gold in London, and gold's weight and bulk to value is fairly low. So you can throw it on a plane and ship it. With silver, because the weight to value is fairly high, most often it's shipped by truck. And I think it's fair to say, I would leave it to Sprott to say, but I think we tightened up most of the silver supply in the part of the world that was within easy trucking distance of the Royal Canadian Mint, which is why we've had to establish, or why the Royal Canadian Mint has had to establish subcustodial relations in Europe and Asia, so that the silver can be, in other words, it can be good delivery in our physical possession with the subcustodian of the Royal Canadian Mint before that silver can be flown from Asia to Canada for final storage in the Royal Canadian Mint. So yes, I would say we actually have tightened the silver market, and certainly regionally in North America, tightened it considerably.
Okay, and you spoke of you touched on the Hunt brothers and you touched on Wall Street Silver. So I just want to go ahead and show you something and just get your opinion on what you think of this. All right, let me stop sharing that. Yeah, I saw it on Twitter and I said, hey, I need to say this for Rick.
In fairness, I am fond of those guys. I really like them. They talk to their market. They care about their viewers. They answer questions, including questions that are hostile. They do it with a smile. I've had a lot of fun with those guys, and some of their members do some extraordinary research on the inner workings of the COMEX. I've hung around the COMEX for 45 years, and I'm learning things about the COMEX from people who've been studying it for only 2 years. So I'm a fan. Some of the stuff that gets said on their site, like some of the stuff that gets said on any site, is to me preposterous. But one of the things that I really like about today is that information is distributed. When I was a young guy, a young investor, information came to you from the universities, not always good sources, governments, invariably bad sources, and major investment banks whose motivations could be suspect. Now there's 100,000 sources of information and discussion, yourself included. And I think this whole democratization of information is a very good thing, particularly on platforms like your own, where the platform operator genuinely cares about the viewers and the customers. I think this is just great. And I've had an awful lot of fun with the Wall Street Silver guys.
In general, it seems, though, that millennials and Gen Zers, they choose to invest in cryptocurrencies instead of traditional gold and silver. I mean, maybe they like the volatility, maybe they like the technology. But from your mentoring different groups of young people so far, do you think that this is the case and are gold and silver perhaps misunderstood with younger people?
I think gold and silver are ununderstood by millennials. but it is very, very, very easy to teach the precious metals narrative to a curious person of any age. When I speak to groups of younger people and I talk to them about the national debt in the United States, the fact that the on-balance sheet and off-balance sheet liabilities at the federal level in the United States exceed $150 trillion. To any age group, I have to say, listen, by the way, a trillion is 12 zeros on the wrong side of the decimal point. So you have to put it in context. But when I say to young people, in particular, the off-balance sheet liabilities, the entitlements, are really a transfer of wealth from younger people starting out in life to older people who have voted themselves all these cool benefits but forgot to pay for them. In other words, when you begin the educational effort with an appeal to relevancy, understand that your future is being stolen from you, then the rest of the discussion becomes easier. And in a sense, what I really like about the millennial investors is that the inherent trust in the system, which was exhibited by my generation, is absent from them. I saw a poll the other day that suggests that more young Americans believe that there's life on Mars than believe that they're going to collect Social Security. Now, with regards to the first part of that statement, I have some problems with it, but I'm glad that they understand the economic promise offered up by Social Security, that cynicism, if that's what it is, or that grasp of reality and the curiosity exhibited by millennials is wonderful. Listen, a lot of millennials, I remember when I was learning to invest, when I was 16, 17, 18, hell, when I was 25, I made some breathtaking mistakes. Those mistakes served me well today. They were painful at the time. So if a young millennial takes his or her stimulus check, or stimmy, as I guess they call it, and waste it, okay, it's probably better to take $1,200 and waste it in a series of transactions in the market than it is to go get high or hungover with the $1,200. And so I view all of these things as being good, both for the young people, but in particular, good for humankind.
Yeah, that's a great point. You touched on narratives. Rick, with memes where one person can drive the crypto market, are cryptos in, let's just say in particular, Bitcoin with its volatile swings, susceptible to being meme driven?
Yes, absolutely. Just like penny stocks. There's no particular difference among investments that aren't arithmetically oriented or technically oriented. And by technical, I don't mean stock charts, I mean technology oriented. To the extent that speculations, which are more what cryptos are driven by narrative as opposed to by utility, of course, appealing to the emotion is going to be very important for promoters, be they crypto originators or be they commentators. So yes, absolutely. I think that the market can be impacted, and I think the market can in fact be manipulated. I see amazing parallels between, if you will, the junior cryptos and the penny stocks in the 1970s. I see the same sort of mania, the same sort of lack of understanding of value. And I'm not trying to say that's true for all crypto adherents. I have wonderful discussions with my friend Tika Tuara about the varying value propositions around different algorithm complexes in various cryptos, which are really, truly wonderful discussions. The special utilities offered up by various different crypto products. But if you ask me the question about the fondness that a whole class of speculators that is probably less technologically oriented and more narrative oriented have around the asset class, of course, for them in the interim, it's going to end up very badly. That's the way one learns.
Okay, staying with cryptos for just a little bit longer. What are your thoughts on China cracking down on crypto miners? And then we have Janet Yellen from the Secretary of the Treasury, and she comes in announcing taxes on cryptos.
Well, are either of those surprising? the currency, the reward for people in government is power. And crypto, in any case, distributes power. You don't have to have a government. You don't have to have a bank. You don't have to have trust in the system. In fact, they're popular because there's a lack of control by the center. That's very threatening. Now, there are probably various reasons why, not just one reason, but there are probably various reasons why Chairman Xi has decided to rein in the cryptos. One would be they consume an incredible amount of energy, an incredible amount of electric energy. And he probably has other ideas as to how that energy might be consumed in a way that would benefit the state more than the aggregation of private wealth by mining cryptos. The second would be that China has formal currency controls. As I understand it, you're not supposed to be able to take more than the equivalent of 50,000 US dollars out of China without the permission of the Chinese bank and without registering it. Cryptos have been very useful for people for a fairly long time in terms of avoiding currency controls. And clearly, the Chinese would like the medium of exchange in China and around the world, at least in transactions that involve China, to be done in yuan, a currency that they can control. The fact that this currency is beyond their control, I think, is problematic. I believe that Xi would like a digital yuan. And if he had a digital yuan, he would like it if his people used it. If he can't convince them to use it, he has to coerce them to use it. That's what the state does. Ms. Yellen, I think, has a few motivations. The first is that they're spending $3 trillion a year more than they're taking in the United States. And she would like to steal private wealth wherever she, pardon me, tax, I meant. She would like to tax private wealth wherever she can possibly do it. And the fact that there's, who knows what the number is, $500 billion in unrealized profits in cryptos in the United States. As those profits get realized, if they get realized, the state would like to steal the excess. That's what states do. So that makes absolute sense. I think, too, that there's an increasing central pushback against crypto because crypto, like gold and silver, represents a lack of confidence in the system. If you're Janet Yellen and a whole bunch of your subjects are buying crypto, one of the reasons that they're buying it is because they have no faith and no trust in you. And that's personally insulting to the people, the big thinkers of the world, who, in my humble opinion, deserve to be insulted.
In a recent interview you gave, you said you were excited with cryptos that are backed by gold and silver, where proof of title was represented on the distributed blockchain ledger. Can you explain why the excitement with gold and silver backed cryptos or tokens?
Yeah, I think that the distributed ledger technology allows us to greatly democratize ownership of gold and silver, first of all. And you're not old enough to remember this, but I remember in the decade of the 70s, a whole bunch of people who didn't trust the government trusted dealers and vaults who weren't trustworthy. So they'd buy $100,000 worth of silver. They'd throw it in a vault, operated by Schlepp, Schmuck, and Schmo somewhere. And they'd go to get their silver, and the silver had gone to silver heaven. In other words, they offset their lack of trust in the system with a trust in a promoter that turned out to be ephemeral. One of the beautiful things about the distributed ledger, if there's 10,000 participants in the verification process, you don't need to trust anybody, which is wonderful. You don't need to trust, JP Morgan Chase, hate to keep picking on them, Deutsche Bank, you don't need to trust the US government, you don't need to trust the Singapore government. The other thing is that we've learned at Sprott that if you store large amounts of gold and silver, that your storage and insurance fees go very, very, very low. If I go to store $100,000 worth of silver at Brinks, my storage and insurance fees as a percentage of my assets under management are relatively high. If you're Sprott and you're storing $4 billion worth, they're very, very, very low. And if the delivery receipt, if you will, is represented on the blockchain by distributed ledger, your percentage share of the storage and insurance fees are infinitesimally low. And then finally, of course, the friction. When a retail investor goes to buy physical silver today, the premium to spot that he or she pays is fairly high. Even in much more efficient products, indirect products like the Sprott Physical Silver Trust, there are exchange fees, all those types of things. Those fees can be dramatically compressed on the distributed ledger. Finally, the very transferability of units that can be redeemed for physical precious metals means that physical precious metals can again be efficient forms of money. A real money to me is a broadly accepted medium of exchange that's simultaneously a store of value. And it isn't a store of value where the store of value is real but ephemeral, like the size of the network. Rather, the store of value is physical gold and silver. If you can exchange physical gold and silver with a tap of a card or a wink of a phone, but it's a real store of value, it means that you could buy gold and silver to buy a cup of coffee or to buy a house. You could borrow against it. You could loan against it. In other words, gold and silver become legally and functionally what they have been for millennia, which is to say money.
Yeah, that's one thing where we often talk about, gold and silver, physical gold and silver, and a lot of times people who do like the physical, they don't necessarily like the token version or other crypto version, and we try to help them understand that this is the way where you can bring your gold and silver into the 21st century to be able to use it. But having said all this, how important is that proof of title?
It's become important to me, Patrick. I can't speak for the rest of the world, but I have become less trusting. Certainly, after witnessing what I witnessed in the decade of the 70s, there were decades where I wanted to own and store my own physical precious metals. Because in the 70s, I watched so many scam artists steal so much gold and silver from so many good people that I didn't want to see that happen. In the beginning, I, like many people, engaged in what I laughingly call midnight gardening. I took my gold and silver physically and I stored it at home. Then I came to hear about incidents where other people who were engaging in midnight gardening had visits from people whom they wouldn't normally invite over for lunch. People often that had guns, which meant that I was exchanging one risk for another, and the other was unacceptable. I began then storing physical gold and silver in bank safe deposit boxes, real true segregated storage, segregated to me. And I stored it legally with disclosure outside the United States because I thought that my physical precious metals should be separated by my person. With COVID, I learned that there are some access problems with regards to storing one's physical precious metal outside of one's domicile. So for me personally, I have most of my physical precious metals held in certificated form by proxy in Sprott products because they're tax efficient for a US person. But this whole concept of trust, what I like about the distributed ledger is that the trust factor is verifiable and it doesn't rely on, as an example, an unallocated storage program where your physical precious metal isn't actually physical precious metal, but rather the obligation of the dealer. I don't have a huge sense of humor for that. It's great for people who do if they're comfortable with that product. It's not my business to tell them what to do, but I'm not comfortable with that product. For me, title is paramount. If I don't own it, if I don't have it physically, which I no longer have the courage to do at age 68, then security of title is very, very important to me.
Yeah, that's a great answer. Last question on cryptos here. Do you own any crypto? And if so, which ones are you holding?
I no longer do. I want to publicly thank my friend Tika Tuara, who some years ago took me through the value proposition around crypto and convinced me to participate. My crypto speculations, I wouldn't call them investments because I wasn't intelligent enough to be an investor. I was a speculator. My crypto speculations gave me so much more than I deserved so fast that I decided that I would exchange that surplus for surplus that I understood better. You know, if you enjoy the rapid appreciation in an asset where you don't understand the value proposition, you aren't richer. You're just more exposed. And with Bitcoin at one price, it was to me an interesting speculation. With Bitcoin at 10 times that price, it became almost an obligation. I had to do something that I didn't know how to do, which was ascertain the value of my cryptocurrencies. So currently, I'm not smart enough to justify in my own mind the valuation of the cryptocurrencies that I was a minor, successful speculator in. I can understand if you were more technologically sophisticated, if you understood more the construction of the algorithm and the value proposition offered up by each individual instrument. But I don't. It's taken me 45 years to become a value investor in natural resources and conventional financial services. And I suspect that I don't have 45 more years to learn the same range of lessons in cryptos.
You know, the other week we heard of unusually high purchases of gold and silver using Bitcoin. As Bitcoin was going down, volumes of purchases of silver and gold were going up, and even the price of silver and gold were going up. Do you think all this stimulus, all the money printing, are pushing people to move away from dollars and the current financial system?
Just on the margins, Patrick. First of all, I don't think that crypto and gold and silver compete with each other particularly, except for the very, very marginal speculative buyer, the narrative buyer. The value proposition in crypto is all around the size of the network and the possibility of frictionless exchange. The value in gold and silver is very different. They are mediums of exchange that are simultaneously stores of value. But the truth is that they're both fringe assets. It's estimated that the market value of all savings of asset classes around the world, investment and savings products, exceeds $500 trillion. So the value of crypto, as an example, is now believed to be about $1.5 trillion. Think of crypto and gold and silver each as being as relevant to the total pool of savings and investment capital in the world as a pimple is to an elephant's behind. They're both tiny, tiny, tiny asset classes. It's interesting to note that for me, part of the attraction, probably with crypto, but also with gold and silver, has to do with the fact that they are such small asset classes. If you look at precious metals, currently precious metals in the US market comprise less than 0.5% of savings and investment products in the United States. The 3-decade mean is alleged to be between 1.5% and 2%. So gold doesn't need to win the fight against dollar-denominated conventional savings products. It just needs to lose the fight less badly. It just needs to regain its 3-decade mean, which I think it's going to do. I can't speak to what the market share of crypto will be. I will just say that the market shares of both relative to other asset classes are infinitesimal. And I don't think that the competition that gold and silver will face as stores of value will be with crypto. I think it'll be with the S&P 500. 40 years of bull markets have taught people that if you buy an index of the largest and most profitable companies in the world, companies with pricing power, that those companies are adequate stores of value. I'm concerned as to whether that or not that's true, given the valuation of those companies, and given the fact that some of that valuation is due to artificially low interest rates. That notwithstanding, I think that the competition that gold and silver faces is not from crypto, but rather from large cap equities on a global basis.
Yeah, speaking of the markets, do you think the Fed has done a good job in navigating through 2020 last year, the challenges of 2020, or have they distorted the markets with consequences yet to come?
Yes and yes. Their job is to maintain the status quo. Their job is to maintain the system that most American voters enjoy and that sustains the power of the political class. And I think they've done a spectacular job of that. I think they've done it through fraud, but I think that's their job. Remember that at its core, government exists because they have a legalized monopoly on coercion. And to the extent that the state has to use brutal methods to defend itself, it will do it. If it can rely on deception as opposed to coercion, that's of course better. So in terms of the first part of your question, from their point of view, they have discharged their obligation with regards to the task that was assigned to them very, very, very well. I think they've done it in a way that will incur great cost. I think that debasing the currency through quantitative easing, by the way, Patrick, if you did quantitative easing, it would be called counterfeiting. You'd be thrown in prison. The way they have done it by increasing debt and deficits, these debts need to be paid off. I remember famously former President Obama saying that the debt didn't matter because we owed it to each other. That's wrong. The spenders owe it to the savers. We don't owe it to each other. One class owes it to a different class. And so you either steal the savings of the savers or you default. So that part of what the Fed has done is wrong because they haven't managed the balance sheet. They've kicked the cash, they've kicked the can down the road. And then finally, stimulating the economy with artificially low interest rates and artificially high liquidity means that what you've done is you've stolen demand from prior years and front-loaded it to this year. It feels good this year, but you have to steal the demand or create the demand again next year and the year after. What I'm trying to say is eventually I think we're going to have to pay the piper. And I think that the piper's bill is going to be very high. So I think that the job of the Fed becomes progressively more difficult. And I'll be interested, if that's the right word, in how this problem resolves itself. I'll feel much more interested, by the way, insured personally, with high cash balances and lots of gold and silver. I wouldn't want to be interested and be a victim simultaneously.
I guess to sum it up here, you were also quoted as saying the dollar is fatal to hold long term, but you will need cash as an option value in the short term. Yet you're not entirely rejecting the cash is trash narrative either. How should we look at cash considering we are going to need cash, yet as we hear many people say, cash is also trash?
The Congressional Budget Office suggests now that the purchasing power of the US dollar is declining by about 4.2% a year on average. So you may assume that if you're holding savings products, let's say the US 10-year Treasury, and you're getting paid 175 basis points, you're getting paid 175 basis points in a currency that's losing 400 basis points a year in value, which is to say that you are becoming 2.75% a year less rich. Not much fun. What I've learned, however, is that 275 basis point deficit is an option premium. If you exist in a market circumstance that is, as I believe, buoyed very much by false confidence, by artificially low interest rates and artificially low liquidity, then you run the risk of a collapse in confidence and a reduction in credit. And I wouldn't call it a market collapse, but the same sort of trauma that we experienced in 2008. I'm not saying that this is going to happen next week or next year. I'm not even saying it's going to happen ever. I think it's a probability, not a possibility. In 2008, I had very large cash balances. And those cash balances gave me the tools and the courage to take advantage of that circumstance rather than being taken advantage of. So I would argue that investors and speculators now need to have large cash balances to ensure against what I see as the probability of some asynchronous black swan event that traumatizes people who don't have cash savings and inures enormously to the benefit of those who do. Also, this is going to make me sound like a lotus-eating Californian, I guess. But to me, the essence of wealth is enhancing your sense of well-being, enhancing your comfort. I've had periods of time in my life, Patrick, when I had a lot of cash and periods of time when I didn't have any. And I was more comfortable during those periods of time when I had lots than I was during those periods when I had none. So having high cash balances, even if I'm losing 275 basis points of purchasing power a year, helps me sleep nights and stay calm.
Okay, that's a good way to put it. Rick Rule, before we wrap up, can you let our listeners know more about how they can find your work?
Yeah, I'm going to incent your listeners to do just that. If you care about what I think about the natural resource stocks in your portfolio, ask me. Go to a website, sprottUSA.com/ranking. List your natural resource stocks. Please, no technology stocks. Please, no cannabis stocks. Just things that an old analyst like me can understand. I'll rank those stocks 1 to 10, 1 being best, 10 being worst, and I'll comment on individual issues where I think my comments might have some value. And send them back to you on an absolutely no obligation basis. Please be patient because this is annual report season, so I'm working very, very, very hard updating that very same rankings database. If you don't hear back from me for a week, don't get mad. But send your natural resource stock portfolios to sprottusa.com/rankings. Also, remember to consider at least the Vancouver Natural Resources Investment Symposium, which will be online this year. We look forward to entertaining well over 2,000 attendees this year, very much like we were able to do last year because people could visit us virtually as opposed to having to fly to Vancouver. For any of your listeners who would like to avail themselves of the opportunity, if you pay the fee to attend the conference and you think for any reason that we didn't deliver value, I'll refund your fee. Money back guarantee. We've had a money back guarantee for 28 years. I think we've had to refund 2 people. So we're very confident in the value proposition that we deliver. So those are the 2 easiest ways in the interim to be in touch with me. And I would, of course, as always, urge the SBTV listeners to be in touch with us.
Okay, we'll do. Rick Rule, we appreciate the offer, and we'll definitely let our viewers know about that. Maybe those 2 guys, they were from the comics. Who knows?
I don't think they like us too much right now, but that's okay.
All right, Rick Rule, we appreciate the time you've given, and I hope we can do this again soon.
I look forward to it, Patrick. Thank you for having me back.
Thank you also, Rick. That was Rick Rule, global investor and the CEO of Rule Media. For more information about his work and his views on the economy, you can find him on social media at his YouTube channel, Rule Investment Media. If you like this video, please hit the like button and subscribe to the SBTV channel to be updated on new content. And do also check out the SBTV podcast on iTunes and Spotify.